Welcome to the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Bob, thank God for coffee. This week I've been freaking I've literally been running around all day. The dog we adopted, like I told you yesterday, needs all this medical care. I'm back and forth to this vet in Joliet. I've been running around like a crazy man. That's where coffee comes in. How's your week been so far?
It's been good, man. I've been drinking pots of this new coffee that I like from the American Roaster. Just again, I talked about this on our show. These are just freaking nice people. Their beans are so fresh. They're roasting themselves. And when you order them online, the beans are never more than a couple of weeks old. Not a sponsorship. Okay. Yeah. I don't get anything from, no. Well, okay, fair. But
we can always talk.
Nothing from them. They were just really nice. I met them at a gun show. I need to go to more gun shows. It's been a great week.
I am a gun show, as you know. Right. Anyway, so the market is not, so we're going to bring John in 1 second, but I got one quick question for you. Before he comes on, oil is down today, right? So what the hell's going on? We have unrest in the Middle East, everything we're worried about in the Middle East, potential supply disruptions, and yet the market stayed relatively calm. Oil, that is.
Well, again, I don't know if I'd call it relatively calm. I look at the oil chart and I say to myself, it's not giving up any of the spike, right? I mean, we spiked.
So that was significant, right?
Yeah, I mean, we spiked, let's call it starting June 11th, but it was before that. It was the 5th when the attacks actually happened, right? Which the spike started on the 6th. But we really spiked on June 11th. I mean, June 11th, crude was up 5%. And then after we were down 17 basis points, then up 7.4%, then down 1.69%, but after a gap up again, all the way up to 75.97. So we've hit $76. I'm going to call it twice, 75.97. And then yesterday we rallied back up again to a high of 73.90. And today we're sitting with a high of 74.27 and the futures of 73.24. So I look at it more like we're not giving anything up and the volume has still been high. I'm sure some of the people that sold today were, they were in it right away and they took their speculative gain and they're done. But if Iran decides to take, and our guests will know a lot more about this than I will, but if Iran starts to mine the straits or close the straits, I think triple digits are in sight if that happens. It's a big if.
That's interesting. Okay. So by the way, I've said this a million times. I'll say it one more time. You could have watched Bobby and I for 20, 25 years on legacy media and think that we are full shit. That's fine. But you cannot deny that we get some unbelievable guests. I will say also that since we have John Kilduff on, we have Bob Iaccino, John Kilduff, and this is going to be a deep dive into oil. And you're going to hear a lot of this from me. Interesting point. Let those guys talk because they've forgotten more about oil than I've ever known. I look at a chart. So let's bring in, he is again, capital partner and the author of the Kilduff Report. Let's bring in John Kilduff. That font where it says your name, Bob Iaccino, but like the A is not crossed in the middle. It looks kind of like Space Age, like a tech movie from the future.
Yeah, I still hate that thing.
Okay, good. John, how are you, my friend?
I'm well, gentlemen. I'm well. Good to see you again. I think the logo looks pretty cool. But
yeah, I think the logo looks cool too. He hates it because I'm above him.
I don't like that Jim is above me because I'm taller than Jim by about 3/4 of an inch.
Just a flat out lie. Back to back, right? Oh, you can't because you're 1,500 miles away. Okay. Where are you coming to us from, John?
I'm from just outside New York City.
Nice. And do you still commute into Manhattan every day?
Not every day. No.
Okay.
Good for you.
This summer, I still go into the Loop in Chicago mostly. And the traffic has gotten so unbelievable just these last couple of weeks. Like you can't get anywhere. Like I'm going to start taking that goddamn L again. And you feel like you're going to get killed on it every time you're on it. So is traffic terrible there too? Or how do you get in? Do you take public transportation?
I kind of do a hybrid. I drive to a place that's it's called Secaucus. There's a big train station there and takes you into the city in about 5 minutes from there. So it's not terrible. But like you said, the traffic is definitely a factor all the time.
It's amazing. Yeah. Okay. You heard
just so you know, from a website called Wallet Hub, New York was ranked the 145th worst run city out of 148 that they measured. Just for the record there. Yeah. Chicago was voted
a lot worse. I'll take 145. Given
Chicago was 136.
146. Oh, we're worse in Chicago.
New York was worse. Chicago was 136 out of 148 possible. San Francisco was at 148.
So it's so funny when I argue about Chicago with people all the time is that, and this Mayor Brandon Johnson, literally 5 parts of his platform were, defund the police, although he didn't bring it into his official platform. He had said it before. No foot pursuit, no cash bail. There was another thing too. These are pro-criminal, anti-crime. So, I mean, these are pro-criminal sort of things. I mean, if you want more crime, you would do these things. But anyway, I don't want to get off the point here. I want to get on oil and I want to get on Iran and Israel. Can you break down, you think are the biggest takeaways of the last week?
Yeah, well, certainly, as you referenced, it is the Israel-Iran conflict now, or I guess war, we can call it, right?
Yep.
Yeah. And, so we're not quite at peak worry yet, in my opinion, and peak anxiety. As you gentlemen were speaking about in the intro here, the big thing is going to be how desperate, in my opinion, does Iran get? They're clearly, we've all been fooled, I think, over the past couple of decades now about their military prowess and really any other kind of prowess. They might have been wanting to take care of their own knitting on their own home defensive front before they were shipping drones over to the Russians to use against Ukraine and to the Houthis and to anyone who would take one off their hands to make mischief, because they're paying a high price right now. I do think that there's so much talk now about will or will they not block or attempt to block the Strait of Hormuz. You brought a relic from the past up when they had the Iran-Iraq war going. Of course, they mined the strait.
Yep.
And then there's crazy stories what I would tell your viewers to watch out for here. Be careful with the initial headlines, because when it comes to the oil industry, and I don't know why, they get so many things wrong. Immediately, people will start talking about gasoline barrels rather than gallons, for example. But even like over the weekend, there was an attack by the Israelis on an Iranian refinery, they said. Well, technically that might have been true. It was really a natural gas processing facility. It's their South Pars gas field. It's the one they share with Qatar. The Qatar side of it, amazingly, to the Israelis' credit, wasn't touched. The Iranian part was touched. That did go on fire. Also, too, if you see the Israelis hitting storage facilities of fuel, there's going to be tremendous explosion, tremendous black smoke signature. It's going to look like Armageddon. It's not that big a deal. These tanks, when they go on fire like that, throw off that kind of look. So for me, you got to stay grounded. I don't think the Iranians are really in a position to block the Strait of Hormuz because of the price they would pay with their own allies, who I count among China and the Russians and others out there who are reliant on their oil, but who are reliant on the price of oil not going crazy. And that's big pushback they're getting from the Chinese. So I'm hoping we get through this. I think the other reality has to be that the neighborhood has changed materially over the several decades as well. You don't have a friend of the Iranians in Syria any longer. You don't have a friend really of the Iranians in Iraq any longer. As a matter of fact, the Iraqis asked the U.S. not to allow Israeli warplanes to fly over their airspace to show you how big Iraq is. And the Saudis, of course, while they have made some rapprochement with Iran recently, they are just in lockstep with President Trump. In that regard, we're very fortunate that the U.S. the Saudi Arabia relationship is so strong right now that we don't even have to worry about that fraying. So the Iranians are isolated. The question is going to be, how desperate do they get? Right. Can we get them a way to save face, get them a diplomatic off-ramp, which I think is the most likely scenario, but it's going to take some time. So
what you're saying, just to tie it up, is that they are beaten. They can't be in this fight, but there might be something that they can do that to their own hurt as well, that could exacerbate things. That's your worry, right?
Exactly, Jim. Because people talk about Karg Island, their big facility, and will the Israelis strike that? Well, if the Iranians shut down the Strait of Hormuz, they can't get their own oil out of Karg Island out to the global market, really out to China. So that's why that whole idea is really a nonsensical one, in my view.
So, John, we had, first of all, I'm glad you brought up the natural gas thing. Second of all, I think it's funny to hear somebody say, thank God for Saudi Arabia. You never would have thought of that like 6 months ago, that anybody would ever say, "Oh, I'm so glad for Saudi Arabia."
Yeah.
But you're right. I mean, you couldn't be more right. I think that's the part of the equation that people aren't talking about, and I appreciate that you are. The second part that you're talking about that a lot of people are not. Crude oil's up about 9.8%, maybe. I'm talking about WTI since if you look at the close prior to the attacks happening on the evening of the 13th, natural gas is up almost 15%. So it was very, very astute of you to point that out, because I think people need to know that this is an energy story, not just a crude story, not just a gasoline story. It's an energy story. That whole region, if this spreads, we're in the summer now, but if this thing drags on, you remember Putin said the Ukraine war would last, 3 weeks?
Yeah.
If this were to drag on like that is, you could have another European issue with natural gas coming in the winter. Germany might not be able to get all the natural gas they need. Who knows where the tentacles extend? But I wanted to ask you about what you thought about the whole idea of Iran being close. And again, you watch this region for a long, long time, about Iran being close to a nuclear weapon. We have Tulsi Gabbard saying they weren't even working on it. We have President Trump responding to that when a reporter asked him. He said, "I don't really care what she says. I think they were close." That's typical Trump response, right? And somebody recently sent me a meme of all the years that people have said Iran is 3 or 4 weeks from a nuke. Have they been close a lot and people have just succeeded in slowing them down? Or do you think, your opinion only, have they never been that close?
It's a strange setup. And I'll tell you what, I've been trying to think of a good analogy for this. Imagine you're on top of a cliff, right? And you want to get to the little town that you can see at the bottom, right? Well, once you get down to the bottom of that mountain, the town's right there. You're there in 5 minutes, even if you walk or run, okay? That's sort of what the Iranian position was, or still is. The thing is, so if they can jump off the cliff, get down to the bottom, they will be in possession of a nuclear weapon within no time. So what Tulsi Gabbard said has been my understanding of the intelligence, that they're not to the point yet where they're looking to manufacture a bomb, but they've been 6 months away for a number of years because of what we've been doing to them in terms of limiting their enriched uranium and to the level of enrichment. The problem you have is that once you sort of check off the next box, it's no problem at all to get to the finish.
Okay.
So that's where we're at, and that's what I think. That's what the Israelis have been trying to communicate, and I think that's been sort of the change, that they've been making moves, and the Iranians, that is, have been making moves and doing things that are getting them down that mountain. In my analogy, we're checking that last box before you get to the last part where it's just putting on the spray paint or whatever analogy you want to use, but that to get to that breakout phase. And the breakout phase is only a matter of weeks. So yeah, their trip to the bomb has been getting shorter and shorter and shorter. Yes.
I thought you were done, Bobby. You go.
Yeah. No, it's okay. I just had a quick follow up to that, and this is actually to you as well, Jim. When we talk about them getting there, okay, does that just mean that now the regime? This is opinion again. Does that just mean that now the regime is like, okay, we have it too now, so you can't mess with us? Or is this the one country, the one regime that would actually say, okay, we have a nuke, load it up and aim it to Tel Aviv? I mean, North Korea has nukes. They've never shot it at Seoul, right? Which they're within reach of. And I'm just curious about that. I don't know. I don't think they would, because I think at the end of the day, your own life is a motivator, no matter how religious you are. But
can I answer it and add to it before, because I want John to take Mike to hear what I say and then comment and tell me where I'm full of shit too. Our whole lives, we've been led to believe that this religious zealotry and ideology is omnipresent in the heavily Muslim countries. And one of the things is they hate people this is what we've been led to believe, that they hate people who are not part of them, and that those people don't necessarily deserve to live. And their life is more dispensable if they're for the glory of God. So they have made me scared of the heavily Muslim countries. But then the logical Jim says, well, I think everything's propaganda everywhere. So why the hell do I believe that shit? Which I do, but I want you to talk me out of it. Is it a worry that they hate us so bad? And again, we're going to get back to oil markets and how to profit and stuff too, people who are listening. I just want to know what John thinks of that.
Well, I mean, the Iranian government, I mean, the only thing they're good at, in my opinion, or have a lot of capabilities on is rhetoric, is propaganda. I mean, you just scratch the surface and, to use your word, they're full of shit. I'm really on everything, Jim. Yeah. I will tell you this, there's been big hopes any number of times over, the couple of decades here, where we thought that the regime would finally get toppled. The people on the street don't really support it, but they're a brutal regime. You say one thing, you say one wrong thing, you end up in Evin prison. You do see more and more of the ladies trying to, doff their headscarves. No, I think this is very much a situation where the government there is not, omnipresent. It's not in any kind of great position, except through the brutal force that you see the likes of, Bashir Assad doing, or what they did back in the Soviet Union back in the day. So, no, I think the Iranian people are truly awesome. And when Benjamin Netanyahu says his quarrel isn't with them and that they're great, I couldn't agree with them more. I can only hope this leads really to what he said is right. Their liberation. They are that great a people. And they're very well educated, by the way.
Okay, so you're saying that this regime may hate us, and some may chant death to Americans, but the average person on the ground in Iran is just a regular old guy who's good people, educated, does not want to blow up and go meet Allah or whatever. That's what you're saying, right?
They want Levi jeans and Marlboro cigarettes. Yeah, absolutely.
That's good.
Yeah, I mean, you talk about real bravery lately, as John was pointing out. They're starting to sort of break away on their own in individual little protests. There's some I don't know if they're high school girls or early college years or whatever they are, doing TikTok dances without their burqas on, and then they hurry up and run away because they don't want to get caught at the time, but they're giggling as they're doing it. Those are brave people, not people with blue hair pushing on trucks that are transporting immigrants. I'm not making a political statement there. I'm just saying that the people at the King's protests, though they're protesting, they have a right to do that. But those girls in Iran are brave. These people are just, these people are just being, doing what America allows you to do. Having said that, so here's my thesis on crude oil. And by the way, you can also tell me I'm full of shit about what I said after I asked you this question. My thesis on crude oil right now is that we're not going to get to that triple digit that the old school mining of the Straits could do. I think the overall demand is weakening, and it's weakening dramatically. I think the tariffs are more likely to have an effect on aggregate demand than they are on inflation. And so I think there is a possibility or even a likelihood of a brief period of stagflation because of that, because of this sort of sustained higher price in crude oil. So my thesis on crude oil is that I'm not going to trade it until it establishes a new range and then breaks out of that range. What do you think?
No, I think that's right. I mean, look, we learned a lot of lessons from the Iran-Iraq war and the mining that went on then. The U.S. Navy can handle it. They handled it back then. Also, too, I've been meaning to mention, back in the day, too, the U.S. Navy top officials in testimony to Congress said, acknowledge Iran's ability to block the strait. They also acknowledge the U.S. Navy's ability to unblock it. I made a point of that.
That's awesome.
It'll be fleeting. But I do agree with you. The tariffs, are I think most deleterious to China. China's really the touchstone here for the price direction for crude oil because of what they represent on the demand side of the equation. They are slowing. Even with all the negotiations and everything, there's going to be a good amount of tariffing remaining on China as we go forward here. So there's going to be a drag. The gasoline demand so far this season has been okay. Not great, but and not terrible, but we've had some terrible weeks at the same time. So right now, this 75 level, you should probably see him, Bobby, if you look back on the chart, sort of a key breakout level if we can get over it. I think it's going to be a tough nut to crack myself. I don't like these big bars we have here from all this, headline generated price action that we've seen since really the beginning of the month. It's been a straight up moonshot. In commodity, at least in crude oil, I can tell you, we generally tend to retrace most of that before we can sort of make any kind of sustained move in whatever direction was sort of generated that way. I think we return back to that $60 area, a few dollars above, a few dollars below before we can sort things out here.
Yeah, so I guess that's the thing I'm looking at. When I look at crude oil, and I want you to comment on this if you don't mind. I look at crude oil as probably the purest supply and demand market out there. And when you see crude oil trading in these $10 ranges for a period of time, that's not something I really look to trade all that often. But crude oil breaks out and then trends for longer period of times based on supply and demand, right? And what I'm hearing from you is that a deal with India is not enough, right? We got to get India and China in some sort of settled situation to be able to gauge demand. Is that correct?
100%. We really, really need China. That's always my focus. And as important as India can be, and it's obviously getting bigger and bigger, and certainly in terms of their demand for energy, it's certainly there. But China, to me, is really the main culprit. And they just internally, in terms of their efforts to bolster their economy, they're falling flat. Their bag of tricks is running out. The reserve rate requirement reductions, the interest rates, forcing money into loans to people. It's just not paying off for them, and I don't think it will. I think they have a hard row to hoe here on that front. And I think that's one of the biggest headwinds for crude oil. What you've been seeing lately with this price spike is all geopolitics. It's all fear, and I think partly ignorance about the situation, especially as it relates to Iran and its prowess to do things in retaliation to Israel. As you were seeing, they've got nothing.
So if China's being essentially taken offline, so it sounds to me what you're saying is you are somewhat bearish crude because of China, provided it can't settle above the 75 level, which is then you scrap it perhaps, and then you think it's maybe bullish. Is that fair to say that that's what you said?
Yes, I think net we were in a downtrend. I think we'll return to that downtrend. I'm not looking for oil necessarily to fall out of bed. I mean, the global demand has held up. Certainly the U.S. economy is holding up. I know we're all worried about it. We're seeing those weekly jobless claims tick up, but still, and like I said, the gasoline demand, which is one of the biggest harbingers here, it has been good. It's the best word I could use. About 9 million barrels a day. I'd like to see it over that. I'd like to see us approach 10 million. That would get crude oil prices juiced, gasoline prices juiced. But it's just we haven't seen that really in a couple of years. And but that we had the pandemic and the rebound from that. This is going to be, I think, a make or break summer in terms of demand measurements for gasoline and the U.S. and the crude market.
So I just asked Bobby because I had another follow-up question, then I completely forgot the question. So when we go live, we'll just cut that out that I forgot. Oh, we are live? Okay, Bobby.
Yeah, we're live already. So just a strategy question for you, John. I have said for years that on EIA inventory day, I don't pay as much attention to the build or the draw, although today we have massive beat, right? I think it was 11.5 million barrels.
Yes.
Draw. I pay attention to the trend of refinery utilization. Trying to take refinery turnaround. For those of you who don't know, turnaround is seasonal maintenance to shift from summer to winter blend and winter to summer blend, vice versa. Which, by the way, it'd be interesting to see if that's one of the regulations Trump gets rid of. That would be interesting to see if he was able to do that. But I look at the trend in refinery utilization, and it is kind of flipped. And I always kind of looked at that. That was one of my short-term indicators for the next day. In other words, refinery utilization last week, 94.3, this week, 93.2. And I said to myself, I used to say to myself when I was traded it more actively, okay, so there's a little bit less demand on the ground. And we had a big pull, right? So we could get, if the move was up, which it was early, we could get a little sell-off from that up move. Have you ever seen anything in the refinery utilization in terms of, I don't even know if you look at the stuff medium, short term, or both?
No, I mean, that's a key number, actually. Because as you point out, that is the heartbeat of what U.S. crude oil demand is. I mean, we focus on some of the other numbers, obviously, like the gasoline and the diesel or distillate category, but that's the key number. I will tell you that the refining margins, the profit of turning a barrel of crude oil into its component parts hasn't been great over the past months. The refiners were very slow coming out of that maintenance, the post-winter maintenance that you were referring to.
Mhm.
They finally did. We are seeing the crack spreads. That's the profit margin measure, as you know, vastly improve. That's why you've seen refiners now rush to capitalize on it. And that's why we are at a 93, coming off a 94% utilization rate. As far as trading the report release, it's not a great correlation. A lot of us know, I give in predictions every week, estimates, and we all kind of know where it's going to come out. You do get surprises, but even if you get surprises like you did today, we can usually find out, what the issue was. For example, this week we had a bit of a decline in imports, also with a pickup in exports, and that refinery number kind of did what it did to us. But also, too, because we export so much crude oil these days, I refer to it as customs roulette, in that if the customs department, catches a tanker one week where it should have caught it the other week, or vice versa, that number gets juiced crazy. So you got to kind of smooth it out.
I have a question for both you guys. I'll start with you, John, but then Bobby, I want to answer this too. When Trump won the election and came into office, I don't even think he necessarily said it out loud, but a belief was that he'd be a drill baby drill president and that deregulate some of the oil industry and allow them to make money. However, prices seem to be depressed to a level that it wasn't really in their best interest to begin expanding their operation at $62 a barrel, whatever, too. But again, that's going to be your answer too. Have we seen any sort of deregulation that could pay dividends and lower oil prices a year from now, 2 years from now? What have you seen?
Well, what I'm seeing is that they are, actively, aggressively opening up more lands for drilling. It hasn't happened yet. They've only been in office a few months, but I expect a number of pipeline approvals in terms of new pipeline, expansion of pipeline, which will help get fuel and crude oil to the coast, to the Northeast potentially. Certainly more natural gas pipelines to be in the mix, and that'll help with the natural gas situation. That natural gas situation, by the way, when people are focusing and worried, just not to divert too much, but worrying about the data center demand and call on electricity, the backup for that is natural gas. And you're going to see that natural gas price get twitchy now when we get heat waves or other storm issues that impact the grid. If we get a higher sustained base load from these data centers, or these data centers sort of hive off, what would otherwise be incremental or auxiliary electricity production, things are going to get real interesting for consumers here in the years ahead on both fronts, natural gas price and electricity price.
So we have a lot of questions, and I want to get to some of those. A lot of these questions are for John.
Oh, Bobby, let's do the banner first real quick.
Yeah, do the banner first, Luis.
Luis, why don't you put up the banner? Guys, you guys who watch the show regularly know this is the time of the show where I make an offer to you from Tradier, 3 months free from Tradier Pro, their options trading platform. Now, we've talked to guys who are options trading experts who've been doing it for decades and some newbies. All of them share the same thing about Tradier's Options Pro. An options pro. Am I calling it the wrong thing? That's what it's called, right? But anyway, it is an absolutely fantastic system. Someday I'm going to be a good, smooth journalist, Bobby. Today's just not the day. But if you guys scan that QR code there, you will get 3 months free. Please do it as a favor to us. We appreciate it very much, and we think you're going to love it. Back to the show, Bobby.
Yeah, the very first one, Luis, I'm just going to go down the list here. Daniel Bone says, taller than Jim, really? Oh, my God. I've been searching. I have a picture somewhere. I don't remember why I saved it, probably to prove this very thing, of you and me standing next to each other on the trading floor doing a CNBC hit. And I'm going to find that. And I promise
please do. And then I'll argue that the camera's at a bad angle. Yeah.
You guys be here every week to see when I find it. I have it somewhere. I think we were doing a speaking engagement together, and somebody asked me if I had oh, here it is. I found it.
Serendipity.
It's a video. It's a video. I'm going to send the link to Luis, and if he can put this up on the screen. Anyway, so that's number one. Number two. Doug Sarbon said, bless you. I don't know if somebody sneezed or if we just said something good.
Oh, he did. I muted and sneezed. Thank you, brother.
Yeah. Luis, how do you want me to send this to you? Just so we can put it up. You want me to put it in the chat? What do you want me to do? Anyway, Daniel again says, is there a natural gas role in supplying the growing data center energy needs, John?
Yes, we were just referencing there, it's 100% going to be a player in all that. I will say, in my skeptical way and nature, I think the data center electricity consumption story may be a bit overblown, because just over the years, what I've seen is how they are able to bring forward efficiencies and more fuel efficient, more energy efficient. I can't believe that's not going to be the case for microchips, but what do I know? But to the extent I was referencing this base load demand back in the day, when they first deregulated electricity and the natural gas markets and trading of them sort of really got hot. A company like Calpine came along that just got reacquired. But Calpine was a super darling. What they focused on was natural gas, what they're called peaker units. These are natural gas fired electricity plants that are attached to the grid. They get called upon during times of high demand, like heat, like cold. But also now, if we get higher base load, these things could become a regular feature of supplying the grid. But they come at a very higher price, and it's going to add to the natural gas demand that we're already starting to have a problem with, and I think install a higher price level from all the LNG exports. I know we're all cheering that, and we'd love to see our U.S. energy industry flourish and supply the world. I just hope folks are realizing that one of the reasons we had super cheap natural gas prices over the past few years, because there was just a surplus of it. Almost couldn't give it away. Matter of fact, prices were negative as recently as last fall in some of the basis points that we trade, the local markets.
I was about to ask a question about
that's going to be there too.
Oh, sorry about the smile on Bobby's face. Made me feel like you have the picture all set up, or no?
No, I don't think he has to set up yet, but I want to go wrap.
So then, John, back to you then. Do you think?
Wait. Go ahead.
Oh, geez.
Oh, he's ready. No, go ahead and put it up. There it is.
You cannot see the feet. I challenge the authenticity and the providence of that picture. Yeah, no, I refuse. You're standing on
your hair perfectly poofed.
Oh God, I hate that picture. Moving right along.
It's a nice picture. I mean, other than Bobby's smaller than you, but yeah, it's a nice picture.
All right, that's it. It has been settled.
I'm short. It's like, I look at myself compared to normal size guy, like I'm so small and skinny. And just the fact that I thought basketball was going to be my game my whole life. What is the matter with me?
Anyway, you're a good coach.
Yeah, I am a good coach. What about being exposure to natural gas? This seems like an interesting play. The prices have been depressed. I haven't looked at a chart in a couple of weeks. Every time I've gone long natural gas, I've gotten my ass handed to me. Is there a spot? What's the technical level where you start developing a taste for longs in natural gas?
Well, I think I would expect another sell-off here between now and the end of the summer here, Labor Day. And we'll get back into the another shoulder demand season. We should be able to see some healthy net injections of gas into storage, which is a closely watched measure. I mean, that's published every week and very closely watched, and a big driver of this market. I would look to buy dips on this. You can pick up natural gas just on the commodity down around towards anything under $3.25, Jim, $3. You want to start doing that because you're going to have two things on your side: this higher baseload demand, this steady LNG export demand, then obviously the various event risks that we have in terms of a heat wave or storms that are becoming down the pike as well. That'll help spike that price. But I will tell you too, folks, you talk about a pure market in terms of fundamentals of supply and demand. Bobby, you're referencing crude. The natural gas market trades incredibly technically. I always say if you want to learn technicals, is probably the best chart to use. The gaps always get filled. The breakouts play out pretty well. The historic or the classic formations, the head and shoulders, things like that, all come to fruition for the most part there. More often than you see in other settings, if you ask me.
I don't mean to interrupt you, but I got the chart up right here, and it looks like it's all happening. Like if tomorrow trades above today's high, I would consider that a breakout from a diamond pattern or a bull pennant or whatever it is. And I would actually think that a reasonable objective of that is like 550. Bobby, are you looking at the chart too or no?
No, but I have looked at it. I am actually. I have it here. When I was trying to measure how much it's actually been up, I love natural gas right now, to me, is a pullback long. I just don't know if you're going to get the pullback. If you're looking at the natural gas futures, the
Yeah, I'm thinking it's a breakout. I think a trade of above 4 tomorrow signals the breakout. And if you assholes lure me in again, and then I get my ass handed to me for the 10th time,
go for it, Jim. Go for it.
Go for it. I never learn. I never learn all. But I
will tell you.
No, but you're right. I mean, again, this is classic chart pattern. Pure technicals on this. You got a sideways channel here going after the rebound off the low, right?
Yeah,
it's primed.
Yeah, Louis, I want to get back to the. There's a ton of comments.
Okay, let's get to questions.
I want to put
just
up
real
a
quick. Just real quick, because a couple of years, because we've been double digits on natural gas. There's nothing between $4 and like 10.
Bingo. That's what I like too.
The big thing. I needed to get that in there. Sorry.
Air Bobby calls.
I just want to put up a chart real quick. And the reason I'm putting this up is I will try and get this in our newsletter. I'm just not sure where. Mike Arnold will tell you that this is basically a perfectly formed double bottom on a weekly, which means that a close above, a weekly close above 4.186 takes us. So one of the key things about a technical double bottom that makes it very reliable is that the full extension of the target does not exceed the move that's being reversed. Okay, so this is the move that's being reversed right here. This is the full extension of the target, and it is virtually the same price. The target is 4.991. The open of this candle, which is what the top of that red bar would be, is 5.001. It is literally. This doesn't make it higher probability. I need to stress this. Okay. It does not make it higher probability that it's so perfectly formed. But this goes into that sort of, I'll defer to Mike Arnold on the percentage on this next time we talk to him. And again, I'll try and get it in our newsletter this week. But it literally is in the mid to high 60% probability that it reaches this 100% extension of this move. That's what I'm measuring right here.
Got it.
Okay, it's the 100% extension of this low to this high. Perfect W so far. The trigger for this is a close above this high, which is 4.186. I can be done with this, Luis.
No,
I want to rocket through some of these comments because some of them are funny and some of them are really good questions. First of all, side note, J.I., are you an excited fan of the new professional women's softball league?
By the way, I do watch it, and I know some of the.
I like it.
Some of the women who play on it.
I know one
coaches at it's Circle. We don't call it Circle anymore. University of Illinois Chicago, who's a real nice player, and I watch her whenever I can. She played with my daughter on team. As you know, I'm a huge fan of women's softball. That's why it irritates me that they're trying to push this WNBA shit. I've coached basketball for 26 years. Women, a lot of that. It's a game to watch athleticism. Softball is a fun game to watch. I'll watch that all day long. But yes, Paul,
I watched a video of a 5'7" influencer beating an WNBA All-Star in a one-on-one game.
Yeah,
it could have been the one game that she lost.
Oh, but it's a game about athleticism. You know what I mean? And for softball, it's a game about skill, golf, tennis. I'll watch the women in that any day.
Yeah, back to what John cares about. Daniel said, "Great insight there, John. Thank you." So I want to make sure I put that up. Again, Daniel, breaking your balls, Jimmy. If J.I. can't move his hands, does any sound come out? I love that one. I love that one. All right, here's a serious question from Doug. Do you think there's an implied volatility due to the Iran situation that drives beyond the cost? Drives the cost beyond pure supply?
Oh, no doubt. No doubt. Because, my expectation is Iran won't try to block the Strait of Hormuz. If they do, it obviously will change the game. So
it's triple digits if they do, right?
Since none of us do it, it's a course driving implied volatility. And I'd say there's about $10 of risk premium in the price right now. You get a diplomatic off ramp here of any kind, or even when we've seen signaling of this thing calming down or going to be over quickly, the crude oil price comes rapidly back down to below 70 at least. So absolutely.
But yeah, so that what's interesting what he says, because to encapsulate it for people is that the volatility in oil is not about what's happening on the supply or demand front. It's about what could happen on the supply or demand front. So of course that risk premium is shooting up, and it's not it deviates from supply demand. But anyway, you guys are the experts. Moving right along. Yeah.
Widge, as usual, Widge with his hugely intelligent comments. I've been hoping for electricity prices to come back to 2018, 2020 levels in Pennsylvania. I'm losing hope that that will happen for all the reasons that Mr. Kilduff mentions, including those nat gas exports. Any hope for those exports to increase to the level where the prices come down, John, or not in the short term?
Well, I think the flip there, Bobby. I mean, these exports, like I said, we love our U.S. energy industry, but consumers, I think, are going to be paying higher prices for when they get the utility bill for natural gas and electricity, because we're eating away at our surplus. We're eating away at the surfeit that we had of natural gas here. That's going to install a higher price. I mean, given the storage situation, typically, we were hard pressed to be above $2, and now you and I were just talking about $4, and as Jimmy Jude would say, since it's printed 10, since it traded there, it'll print there again.
Yeah.
So it's not going back anytime soon.
Doug says the key to trading natural gas is to watch what he does and trade the opposite way.
No, Doug, I do. That's me. You can't take my trophy.
It is the original Widowmaker. I know other commodities and these have been called it. To me, natural gas is the Widowmaker. So
Amen.
Don't feel bad, Doug.
John, can you talk about the Permian and what's going on with the sort of the predictions of declining supply in U.S.-based production in general, in the Permian specifically?
Yeah, look, those wells have been around for a while, but I've heard the demise of the Permian for several years as well. It takes some natural breathers. Obviously, being down around $60 a barrel, and everyone fearful that the wheels were going to come off the OPEC bus last month. We had people speculating about, some of the big banks were talking $40 and $30 oil. You get that kind of talk, they're going to rein in their horns in the Permian, which they started to do a little bit. You're not going to be ultra aggressive and try to get every last bit of oil out of there. I'll tell you though, with Exxon being in there and Conoco now, they're amazing. They're coming up with all kinds of new technologies to get even more oil out of these wells than we ever thought possible, even though I thought we'd already done that. So I wouldn't be too concerned about short-term dips, short-term declines in the rig count, because they're whittling the price lower and lower there. A lot of the break evens are down around $30 a barrel. So it's just not the madness that we saw over the past 10 years or so, where there was such a gold rush, if you will, to get in there, get drilled, no matter what you had to do, and get barrels and just sell them and do what you had to do. So no, I'm not worried about it at all. There's plenty of oil there. And we haven't even, gotten anywhere close to maxing it out in terms of even the acreage to be drilled.
Did either of you guys see Landman?
Yeah. Oh, I love it.
It was good.
I love
Landman's
Landman.
one of the best shows I've seen in the last couple of years. I thought that was a fabulous show. And I love when he goes on his tirades about the supply and demand dynamics and the price and what that does to them. I thought that was a fantastic show.
And how everything you touch is made from petrochemicals.
Every damn thing, right? We should be having a month to pay honor to the fossil fuels sector, because they give life. But anyway, yeah.
You like to clean syringes at the hospital?
Yeah.
These Taylor Sheridan shows, man, the way that he completely eviscerated vegans in Yellowstone, talking about how many.
It's the same guy who did Yellowstone and Landman.
Yeah, Taylor Sheridan does Yellowstone. He did Landman. He did Bass Reeves, Deputy Marshal, whatever the name of that show is. He does Lioness. He does all. I mean, he is
watching Landman. He has a look for casting women. By the way, it's 2025. Can I?
Yes, kind of the same women a lot of the times. By the way,
I would say they are all fabulous. I will just say, yeah. I want to
ask you a question I've never asked you before, John, and I don't know if it's relevant or not. I've always noticed every time we've talked about inviting you back on the show, I noticed that obviously you have the long-running energy overview, the daily report, and you have the Cat 5 market analysis system. Is that something you want to talk about? I don't know what that is. It's obviously your system, but is that something like?
So it developed over the years in terms of, people. Some people swear by the fundamentals, other people swear at them, right? Some people swear by the technicals, other people swear at them. I've always felt that you needed a sort of a broader approach here, and particularly as crude oil sort of taken its role as an indicator of the economy, or a reflection of the economy, or the thermometer of the economy. You needed all that. So the five buckets are macroeconomics data, the fundamentals themselves, the technicals. I mean, you have to. How could you not look at this chart for natural gas we were just talking about and not see a breakout as plain as your face, maybe brewing? You had to respect that. I mean, I could have a ton of gas in storage right now. I could have, temperate conditions, outlook for the remainder of the summer, but still have to look at this and be respectful of the fact that this thing could rip. The other couple of buckets are what I call situational risk, things that come and go, like this Iran-Israel war is something that you have to get in, assess, and it'll come and go. And also, too, sentiment. Because if there's anything, as you guys know in commodities, right, sentiment just gets crazy sometimes. The boat gets loaded to one side. Whenever I see, net speculative length in crude oil or natural gas, nearing records, or, to the point where they couldn't put another dollar into it, you got a problem there on the long side. So that's another thing. So those five things are what drives us. We assign value to the indicators, and it just sort of gives us a readout at the end of the day as to what we think, based on all those things, the price should go.
Bob?
Yeah. So the last question I have for you personally from this particular show, and hopefully it triggers some more, is the idea that you sort of mentioned with the crack spread. I'm not a big fan for myself personally of, I don't want to even call this a correlation, so I'm going to just leave that out. I've always told people that, people will look at crude oil on CNBC, and I know you've been on there before, you've been on all the shows. People will look at oil and they'll be like, yeah, so crude oil's up, it's going higher, so I'm looking at the following crude oil names. And that's always driven me crazy, because I've always thought that the only thing that's 100% correlated to crude oil is crude oil. So if I have an opinion in crude oil, I want to exercise that opinion in crude oil. However, you mentioned the crack spread. Does that get you looking, not for yourself, but for clients, or just have a trigger in your brain as the margins are starting to widen, that maybe it's a good time to look at some of these stocks? Is that something you ever look at?
I do, and I couldn't agree with you more that the correlation as far as crude oil is going up tomorrow. I should buy some Exxon Mobil. It might not move your boat because
right.
Because that's a higher cost input for Exxon Mobil's refineries. Okay, and there's a lag, and they can't recapture it. People harass them about raising prices at the pump. They can't raise them fast enough, believe it or not, to sort of recapture their losses when it comes to the spike in crude oil. I'll tell you this though, to the extent if this $70 plus range were to hold for a while here, you're going to see some incredible surprise upside earnings results from ExxonMobil, from Fang and Conoco and the rest of them that have that portfolio.
Fang's my favorite one, by the way.
Yeah, Fang is great.
Back energy for you people watching. But anyway,
Diamondback energy. Sorry, it was escaping me there for a second. but that's what you'll see, and that's what you should position for. And in that regard, to the extent you're going to see a higher priced commodity period going forward, they're going to do great, and those stock prices are going to go higher. On the flip side, I don't care how much you say ExxonMobil is lean, mean fighting machine. They've done this, they've done that. They'll protect their dividends. They will borrow money to preserve that dividend, as we saw in the aftermath of negative oil in the pandemic. So that is safe. That's a rock. But they're going to have bad earnings, and the price of that stock is going to go down. So that's how you got it. That's my telltale for that.
To add something, like you said, Exxon, the refineries, the input cost goes up when crude goes up. But years ago, coffee prices were going through the roof, and Starbucks stock was following it. That's an input cost to Starbucks as well. Starbucks doesn't make coffee. So I was thinking, the market sometimes doesn't have to be reasonable. When they decide a correlation exists, the correlation exists, right?
Right. It's so many times, even with some analysts, you're like, what are you talking about?
Right. But you hit on something that I thought was very, very interesting. So if you want to trade crude and you have a prediction in the movement of crude, you play crude. But if crude sticks at an elevated level for a period of time, and we're looking at the earnings season coming of some of these big energy companies, that might be the time where you can make the argument to play those because they're going to benefit from higher margins. And you're not even saying that crude is going to move imminently in either direction. You're saying it's been there enough to support these earnings. That's what you said, right?
Exactly. It's going to go right to the bottom line. You're going to get ahead of the street a little bit because, you know, the analysts there can't be too fleet of foot in terms of, you know, adjusting their ratings for whatever reason. You know, it's ratings by committee, as you guys know. You all worked at big banks like I did.
Of course.
You know, it's like ridiculous.
That's why we don't work at big banks anymore.
Right? Yeah, same here. So, but that's why. Because and then it'll be, big earnings surprise. I'm like, where were you when crude was $80 a barrel all last quarter?
Dipshits.
Are you kidding me? Surprise.
Yeah. Bobby, what you got a last thought?
I really like the FANG chart. I almost want to put it up now, but I don't want to encourage people to do a trade. But if FANG's got a pretty short-term bullish pattern developing for me that has not triggered. I just had a conversation with a friend of mine who was, railing people buying CoreWeave. Actually, it's Tim. We all know Tim. Tim's up with the show. He said CoreWeave, the stock itself, is another example of a company selling $1 for 50 cents or 50 cents for $1. I don't remember which way he put it. I never did understand, being as dumb as I am, that particular colloquialism. I'm smart enough to say colloquialism.
Anyway, for sure. Yeah.
FANG has a really good short-term pattern that has not triggered, but may in the next couple of days. And that he's here. Tim, what did you say? CoreWeave is selling dollars for 50 cents. I don't remember what he said. Anyway, if FANG triggers this, it runs smack dab into its 200-day, which today is sitting at about 161.55. The stock right now is trading at about 148.78. So it's a good short-term trade.
It's a trade, yeah.
You get, $13 out of it. But then it probably fails from there. So it's probably more of we should watch this crack spread a little bit more, as John said, keep an eye on it and make sure this particular trend is sustaining. I'm making this a longer rant, hoping Tim will type in what he said CoreWeave does so that there it is. Luis, can you put Tim's last comment on the screen? There it is. Selling dollars for 50 cents. The higher their revenues, the more money they lose.
I love it. Right.
I once had a guy, John, you'll like this, and Jimmy, you know him, so I'm not going to tell you who it is. He was the CEO of one of the firms I was at in Chicago. And I was telling him, I said, we are actually losing on every contract we do for these guys. He goes, yeah, but we'll make it up in volume.
No,
don't.
I gotta go.
Yeah. So,
all right, let's call it.
Last warnings for anybody, Mr. Kilduff?
Yeah.
I'm sorry.
Where can they find you, John?
Yeah. Tell people where they can find you.
Again, capital.com. You can drop us an email there. It's the best way to go.
It's awesome. Are you still active on Twitter?
I am actually. Yes, I'm a Kilduff report there.
Yeah,
yes.
We put it up on the screen for them to find you there.
Okay,
but John has amazing insight on oil, and I hope this was as valuable for you guys as it was for us. This has been Tradie Airs, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Please also Jesus Christ. Did you, Luis? You too, Luis? He stabbed me in the back. E2
at 2 anyway. That was my request, Jimmy, just to defend.
And thank you. Join us on the Unfiltered Investor 2, where we'll talk about more of these topics as well and break down some of these in more minutia. Thank you guys so much for all the support. I'm Jim Iuorio. That's Bob Iaccino. I think I said that once already. Someday I'm going to learn this journalism thing.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.